Hey, so welcome to the first financial wellbeing webinar for 2024. In this session live, we've got Jess along with us, who's studying in the Faculty of Health, and we may have other students come in and out throughout the session, so we'll just manage that as we go. It's perfectly fine. I know this time of the evening is a tricky one, but hopefully it's one that most people are available for. So that's, we kind of put out a poll to see what was the best time. This is generally the best time, but it's still really hard. So, but this is recorded, so hopefully those who are listening back get some value out of the webinar as well. But Jess, you can ask questions at any point. You're using the chat. I don't know if others listening back will see the chat, but I'll just read out if you've got any questions as we go through. This first session, so we're going to run these monthly. I've been doing this for about a couple of years now with the SCPA, and we're going to go, so what I wanted to start with was a topic that wasn't probably so numbers heavy. So we're not going to get into the depths of credit cards and calculating, repayments and optimizing all of that. We're not going to get into that tonight, but we're just wanting to sort of have a chat about how you navigate the credit card landscape in Australia, and talk about some of the responsible lending elements and components as well that we as consumers need to be aware of as well. Welcome, Shobna. Nice to have you along this evening. So I'm just going to keep continuing on with the webinar we just started, but please feel free to ask any questions at any point if you need to. So just as a disclaimer too, these webinars are just purely for educational purposes. So it's really information to hopefully help, bring about some, there's a big gap in financial education, particularly across the world, but in Australia, it's something that's not learnt at school, and we pick up bits and pieces. So what we're trying to do is really try and help by providing you some educational, helpful financial literacy information to help you alleviate some financial stress, which we all carry, that can free up some space then for you to be able to focus on your studies and get the most out of your time at SCU. So welcome, a big welcome, and I know those who'll be listening back to the session, I've got the list of everybody who registered, and we've got students from across a whole lot of different faculties, which is amazing. So just like to always do a big welcome and acknowledge the amazing work that you're all doing and the different areas and fields of studies you come from, and also to acknowledge that the skills that you're learning and applying are really useful in your financial life. So don't just think that, I'm becoming an expert in, as a physiotherapist or as a child psychologist. The way that you approach, the systems you follow, the way that you problem solve, all of those things are really relevant and useful for your financial well-being and financial life too. So try not to sort of divide or perhaps categorize yourself as somebody who's not good with money or who's good with money, but I'm good at this, I'm good as an engineer. But yeah, please make sure that you acknowledge all of those amazing skills that you've got and bring them in, integrate them into your financial life. So I just like to try and encourage that as well. As we're getting started, just to do the acknowledgement of country, I'd like to acknowledge the traditional custodians of the various lands on which we're connecting from today in this online webinar. I pay respects to elders past and present, and recognise and celebrate their connection and role in caring for country over thousands of years. May their wisdom and strength be with us today. So just quickly, as this is the first webinar for the year, just to introduce myself and some of you listening back, I know who have registered, I've worked with before, but I just like to give you a little bit of background. So I'm Liz McLardy, although it says on my thing I'm Alison, which I'm not. I'm just logged in as her for the purposes of this Zoom session. But I'm Liz McLardy, and I'm a CPA, and I've got undergrad degrees in accounting and IT and a master's in human resource management. So I've spent a fair bit of time in corporate helping businesses manage their budgets. And then I stepped into education. So I taught at SCU, but now I actually teach across a number of different institutions in the accounting and finance business areas. But in addition to that, I'm also a qualified financial counsellor. So it's kind of my little side passion. So I have a small little business And that's where the SCPA sort of engaged with me to provide some of these financial wellbeing webinars. Financial wellbeing and financial literacy is a massive area which really needs to be tackled, and this is a very small way in which we can try and provide some additional, as I said, educational material, resources to really help support you as students at SCU. And I guess the whole aim is really, captured in this slide, is really helping you to feel more confident and capable financially, so that you can then take that load away from financial stress, so that you can then focus more on your studies and those passions that you have that you're pursuing for your career, etc. So that's really the key the key aim of these sessions. And we'll have as I mentioned before, we're having about once a month throughout the year, different topics. If there is anything particular that you would like covered, please let Alison at SCPA know just through I'll send you all the email addresses at the end, but let them know if there's anything particular. We've shaped the topics for this year based on the feedback we've had from other students previously. So always keen to hear from you and let us know what are the burning questions or gap areas in your knowledge that you would like some assistance with. So we're going to look at, so as I said, I'm not going to get too number crunchy, but there's going to be numbers, to be honest. It is a finance topic. So what I really want to do is sort of talk about and give us an idea of what does the credit card landscape look like. And I checked in with Jess at the beginning, and she said she hasn't got a credit card, she's got a debit card, which is amazing. So she hasn't gone into that to the credit card world yet. Shabna, I'm not sure what your situation is, if you've got a credit card or not. And
I
if
have a credit card. So.
You do? Okay, lovely. And is it just one credit card, or do you have a number?
No, I have a debit card.
Oh, okay. Okay, yes. Good. Okay. And so then my interest is also to then think about, so if you haven't got a credit card, do you have any buy now, pay later sort of, like a Afterpay or anything like that? Do you use any of those?
No, not at all. I'm very strict with myself.
Okay, amazing. Okay, good. So I've got two really financially conscientious students here tonight then. That's amazing. So some of what we cover may not really be relevant. It may just reinforce, maybe your decision to not have a credit card. And that might be a good question to ask now, if you don't mind sharing. Is there a reason why you both don't have credit cards? And I know Jess is using the chat a bit, but you're welcome to use your mic as well. But Shabna, is it just because you grew up thinking that the debt was a bad thing to get into?
No, I used to have a credit card, and then when I got this new mortgage nearly 7 years ago, I applied for a credit card with the new bank that I had my mortgage with. And I think one of the questions was, how much do you have in your super? And I sort of didn't know, and I couldn't be bothered looking. So I sort of guessed, and I think they checked, and then they said my information was false and they couldn't issue. So I could have gone back and reapplied, but I just haven't gotten around to it.
No, okay. Well, and that also means that you haven't really needed it either. Would that be right?
So that's right.
Yeah,
if I can't afford it, I don't buy anything.
You don't need it. No, which is amazing. And there'll be students listening back to this will be in a completely different scenario. So, and Jess is just sharing that she hasn't really needed one, and her parents sort of really discouraged her probably from an early age not to get one, which is great too. But if we have a look at this slide, and this is kind of giving us a bit of an idea in Australia what the situation is, we can see there's like 13.5 million people who have, like, that's how many credit cards there are in Australia. And then if we look at what the amount of debt is, so it's $18.4 billion of national debt in Australia because of credit cards. So that's all credit card debt. So, and this, I really, because I pulled on, and I wanted to jump on this topic because it was actually something really topical for this year in the news, but also just I was hoping that it might help people to, if they are in a credit cycle and stuck in it, give them some information to kind of maybe stop and look at what is going on, and if we can see how massive the credit cards industry is having on our nation. So, but it's also to point out that so I guess the key takeaway for Jess and Shobna is that you're not one of these people, but there are a lot. So you're probably a minority, I would imagine, if we're talking about, you know, population and the amount of credit cards that are in circulation, and then the amount of corresponding debt that's sitting with them. So I hope you could at least take away from tonight, you know, feeling like I've made a good decision, and I've already made a really positive step in the right way for my financial well-being. So that's amazing. But for anybody, you know, watching back and having a credit card or a number of credit cards, I guess this is probably at least to acknowledge that you're not alone. The landscape in Australia, this is telling us that there are millions of credit cards and billions of dollars of debt that people are sitting on. And that's hugely stressful. So consumer debt, which is what we talk about in accounting and finance, is really the debt that you take on. It's not for your home. It's credit cards, buy now, pay later, car loans, personal loans. And they attract very high interest rates, and whatever you purchase ends up being multiple times more than what you thought it cost. And we're going to unpick some of this industry in the webinar tonight and kind of show you, you know, why it is like that. And having the knowledge that that is the case, it's hopefully going to empower you to stop yourself from getting stuck into a credit cycle or even being tempted, because it's going to get more and more sophisticated, is my prediction. And what we're going to see in a couple of slides too is just how saturated the market is for credit card providers. So we're looking at a situation in Australia where the average balance is nearly $3,000. So that's people that are sitting on, that's money that's not theirs, that they owe. And the average credit card purchase is around $100. So yeah, not a great scenario. So we'd be really wanting that to change, and we can all make a difference to make that change. Some information here too is really interesting, is also looking at the rise of credit cards. So we can see that, and this is from the RBA, looking back over the years. So we've got data from 2007 up to 2022, and I've just highlighted the credit cards there. And you both have debit cards, so we can also see that that's also increased. So that's obviously a major way that consumers are now paying for things. And we can probably, so we've got, I'm just shifting the little bubble around, we can see that cash, the amount of cash that's being utilised is declined rapidly. So what happens there is that when you use a card, a debit card or a credit card, is that you lose tangibility of your expenses and you know what they really cost, because you're not holding on to the money. Jess is just saying that, so you thought that maybe PayPal would have increased more, you thought? Yeah, so it has increased, but not quite as much, hey? So interesting there, but it's more, and we haven't got the buy now, pay later scenarios after pays as well, but I would probably like to say would be up there as well, seeing a big increase. So yeah, so we're definitely seeing, and we know that that's how the market, the payment method market is going to change, and it's good for us to be aware of that. We know that we're going to be discouraged to use cash. In some ways it makes it easier because you don't have to carry the cash around, you don't have to get it out, you don't have to worry about holding it. But there can also be that concern, you know, in a personal finance budget management point of view, is that it's very easy to lose track of your expenses. And that's really what happens with a credit card, because you can just spend and spend and spend up to your limit. Whereas with your debit card, and depending on how you both manage it, you might have debit cards for particular things. So you might sort of set a boundary for yourself around groceries and have a debit card that you spend each week. And once you've spent it, you've spent it. And that's a really healthy way to manage your expenses, because we need to, you know, after we set a budget, which is what I'd always recommend first, is that we've got to help ourselves to then be able to deliver that budget. So having the cash helps a lot. So when I'm working with clients on a personal basis, if there's somebody who's really having a lot of trouble with reckless spending and they're spending out of control and just losing touch with what they're spending their money on, I always encourage them to actually take the cash out and do their budget, agree, okay, this is the amount that I'm going to spend each week on clothes or eating out, whatever it might be, and then take that cash amount out and make sure that you don't spend any more than that, and you just say, right, that's all I can spend. And that helps to keep to that boundary. And then once you've got the momentum and you're sticking to your budget, it then changes your whole dynamic, and it can be really helpful. But the problem is with credit cards, and what we're seeing here with this massive increase, is that it just allows consumers to just again fall in the trap of being driven by consumer, you know, wanting to buy more. And we know that the culture that we have, that we're constantly fighting against, is always wanting you to have something new, and there's the latest this, and the person next door, your friends have got that, so you want that too, and it really reinforces that, which gets people into a lot of trouble. So really challenging. I guess alongside this is also those people, you know, considering what we've all been through recently economically, their prices have gone up for things, and there is a pressure in terms of, you know, wages haven't increased by the same amount, and it is challenging. So for people who are really cutting it fine, if they're given access to a credit card, the temptation to, you know, buy something extra for themselves, or to just make that day a little bit better just through buying something, that temptation, it's so difficult to resist if you're not armed with all the information about credit cards, what the cost truly is, and you don't, you know, be proactive in terms of money, managing your money. So I guess this again, the takeaway from this slide is again that, so the first one is really that, oh my goodness, there's so many people who have credit cards in Australia, the debt is massive. We can also see that credit card usage is increasing. The industry, then the banking industry, is going to reinforce less cash being available, and that will, because obviously the cost of them providing it, you may have heard in the news, ATMs are getting closed down, etc. So it just as a reminder, and even for you both, even though you use your debit card, is just thinking about, how do I manage my boundaries? So how do you both do that? Do you have a budget and then, you know, allocate money for particular things? Or how are you tracking that at the moment, if you're comfortable sharing it? Okay, cool. So just saying, yep, that's how you do it. And do you just have the one debit card, the one account, but you'll have, you know, income coming in? Maybe you do something with some of it, save it or put it aside, and then have some of it as just available for all of your day-to-day expenses.
Yeah, so I have one card, but I have multiple accounts, and then I can just transfer the amount that I've allocated for the fortnight when I get my pay into each account, and then when I use that money, like when I go and buy my groceries, I'll transfer the money out of my groceries account into my the one that's linked with my card.
Account. Okay, cool. So if you went to Coles and you spent $100 and that brings down that debit card balance, you then transfer out of your groceries account the $100, tops it up, and then you get paid, and then the next week you get paid, you put money into each of the accounts.
Yeah, exactly. And then whatever's left over at the end of the fortnight, like when I get my new pay, whatever's left over, I put it into my savings.
Amazing. Okay, cool. You've got no troubles. You're doing amazing. That's brilliant. That's really good. And does it work well for you? Do you feel like you're restricted, or are you feel really good with that sort of systematic approach?
No, I feel like it works well. I think it works well for me.
Yeah, that's amazing. Thank you for sharing, because students listening back to that may not have even thought of that. Some of these things that we feel like are really straightforward, someone may have told you about that. You might have come up with it yourself. but others will really benefit from it as well and think, oh, I might try that too. So yeah, absolutely. So most banks will allow you to have a number of accounts opened, but as Jess is saying, you can have a debit card linked to just one of them. And then as your income comes in, assign money to each of the different buckets or accounts, whatever you want to call it. So give every dollar you earn a purpose. So it's either you're going to put it in the spend, save, or share, or whatever category you want it to be, however you want to break it down. It's your money, you choose. But that puts you in the driver's seat. That's you saying, okay, I'm going to allocate $100 for groceries. I'm going to put aside, if you're saving up for a holiday, at the end of the year, I'm going to put aside, $50 a week into the holiday fund, and then you just chip away. And it's just those small, small steps, but consciously taken, that really change your financial life. So, but that's amazing. And you could, as somebody listening to that too, could probably hear as well for Jess that there's no stress associated with that. And I imagine, and if you don't have one, I would recommend one of those buckets is like a just in case fund or an emergency fund. So, if there was something, which happens to everybody, if your car needs a new tire or, your laptop breaks, whatever it might be, that you've got access to emergency funds. So it's not then forcing you to try and find, or be tempted to find credit, which is what we're going to see in the coming slide too. One of the key reasons why people get into credit card debt. So here we've got, and as I was just talking about the emergency funds, that's the number one thing. So if we know that, if that's the number one reason why people get into credit card debt, what we can do to help ourselves. So if we are in credit card debt, or if we don't want to have it or be tempted, really important to make sure that you build up an emergency fund. So Jess and Shobna, do you both have sort of money set aside that's for emergencies, that's just sort of sitting in a bank account, maybe a high interest bank account, easily accessible?
I kind of just have my savings account, but if I need to take money out of that, I can, but obviously only for emergencies.
Okay, cool. So the money you allocate, as you were sharing, that's going into savings, those savings are both for emergencies, but potentially other things in the future too. It may be that you save for a house deposit, or is that kind of thing? So you just kind of let it build up.
Yeah, pretty much. Yeah. So it just
Yeah.
builds up until either obviously need it for an emergency, which I haven't yet, or
Good.
save it for a house.
Yes, brilliant. Okay, that's great. Shobna, I don't know if you're still able to sort of join the conversation, but do you do a similar thing, or what's your situation with emergency funds?
Sorry, I was having dinner.
That's okay. I know, it's a terrible time. I get it.
All my money goes into my mortgage, so
Okay.
yes, I just take money out as I need. I've never had a budget, but I seem to be pretty good at saving and sort of.
That's good.
Yeah,
yeah. So and then what you're really doing is it a revolving credit? So you could take money out of the mortgage if you needed to, and there wouldn't be any penalties or anything. So you've kind of got your emergency fund in there already.
Yeah, I've got a huge. Is it called overdraft or overdraw?
Overdraft. Yeah,
overdraft,
or yeah. Perfect. Yeah. So that's great.
So I just withdraw money from there if yeah.
Yeah. And then the main goal is to just get the mortgage paid off. Just keep working at that. And then once you've got it so low that you're paying so little fees, it would then just be great to build up an emergency fund, so then once you close off your mortgage account, you've got emergency fund.
Yes.
Yeah, that would probably be the next step, but that sounds really sensible. So yeah, that's great. And students, we're kind of jumping into different topics here as well, but students often ask, well, how much should you have an emergency fund, etc. So it kind of depends, and this is for students listening back too. So if you are in credit card debt, it's still important to build up emergency funds, because what would be recommended is that you would pay down the minimum payment, make sure that you're not getting charged anything additional on all of the credit card facilities that you had, but then you should be building up an emergency fund to at least $1,000 because, and when we're looking at this slide again, the main reason why people go into debt is because of emergencies. So to stop the cycle, you need to make sure that you've got some emergency money somewhere, because we know that life has twists and turns and something will come up. So even if you are in credit card debt, really important to have those emergency funds sitting there. So $1,000 to start with, and then start working away. And we do have a topic that directly talks about consumer debt and how to prioritise, and that's a different topic, but that's just a bit of a side. And then in terms for you both, or you know, there's lots of different ideas, and it's for everyone to work out their own comfort around having access to emergency funds. So a lot of time we'll say, you know, make sure you've got sort of 3 to 6 months worth of expenses, but it's always important to then ask the question, so why is it 3 to 6 months? Because then you need to then know whether it's appropriate for you or not. And the key thing to think about is, you know, if I lost my job, how long would it take me to get another job? Typically, that's what you're trying to cover for. And if you're in an industry where it's very easy to find work, maybe holding 3 months worth of emergency funds is okay. But if you're in an industry where it's really hard to find work, and this is why it's important to kind of keep an eye on that as well throughout your life, like nothing to do with personal finances set and bucket. You want to keep at least reviewing it once a year. But if you're wanting to think about, okay, how much should I have an emergency? It's about how quickly would it be for me to, you know, replace my income if I lost my job. And I'm not talking about, you know, for medical reasons, if you've got, you know, insurance, but it's more if you lost your job. So yeah, if you're in an industry where it's quite a specialized area and it may take you 12 months, you want to be putting aside 6 to 12 months. And the best place for that is just in a high interest savings account. Some people will say, well, that's waste. Maybe it should be, you know, because it could be $100,000 you have in there. But you need to be able to access it, and you don't want the fluctuations of shares. You don't want to be having to sell it at a time where the market's low. So yeah, a good financial wellbeing sort of hygiene practice is yet to have those emergency funds there. And then we can just sort of see also in this graph quickly, you know, looking at what some of the others, it's interesting just to note what also the reasons are. People also go into credit cards because they want the points, so the bonuses, and we'll talk about that in a minute too. But we've got to make sure that we're not thinking that we're getting a bonus, but we're actually paying out more than we would. And neither of you sound like you're in that bucket, but people, they're brilliant at selling credit cards because they make so much money out of them. And there's the reason why the market's so saturated is simply because of that. So they will have a lot of marketing spend behind them to try and influence you as much as possible to go into credit card debt, because they make a lot of money out of it. So don't just go in it for the rewards of the flights. It's not worth it, particularly the stress of it. So we think about the financial side, but just your body knows when you're carrying debt and when you don't. So yeah, where you can go without it. But your house is obviously a different matter, but it's just around that consumer debt. So big purchases, trying to pay off other balances faster, had a drop in income. So they're kind of some of those key reasons. But yeah, the emergency one is the big one. So the big takeaway is, yeah, please ensure that you've got access to emergency funds. That would be a really good thing to do. So now just having a look, you know, we're kind of extending our sort of exploration around the credit card landscape in Australia, and we're looking at, so why are there so many providers? And it's simply because they make a lot of money, as I've just said. So, and here is typically one of the ads that they'll try and convince you how many points that you can earn, and you work out, well, does that get me a free flight? But most of the time, the reason why they do that is that they know they wouldn't just give it away for free. They wouldn't, out of the generosity of their heart, want to give this away. They know that once you've got that credit card, most of the research will show and support, as we saw in the first slide, the $18 billion worth of debt that people are in. Once they've got the credit card facility, the temptation to purchase something and maybe because you've got that access to that facility, it might be that you'll be enticed to buy, you know, maybe you were just going to have a flight or a holiday to Bali, but now that you've got, oh, I might go to the UK, you know, so you might get those points, but you've spent 3 times as much as what you were going to, and then that's what happens. So they're making money out of it. So whatever they're offering you, and they sell it in all sorts of ways. So it's all about the emotional, and Jess, I know that you're doing your honours in psychology, so that they're using a lot of our psychological triggers here. It's all about the life that you wished for, you know, you deserve it, or whatever all of those messages are. And they're tough. I'm not going to say, like, obviously they're tough because we've got 13 million credit cards out there in Australia, and so much debt. So it's tough for people. You've got to fight against it. You've got to fight against the culture of having the newest, latest thing, and also to stand tall in your ability to define yourself as successful without having to have all those things, because they make it like you've got to have all stuff. So that's what they'll manipulate you on. So have the life you wished for. Another one is, which is the buy now, pay later scenarios, which I wanted just to touch on as well, because it's just a slight rejig of the credit card, which plays with your mind really at first at that point of sale. And they're again welcoming you to buy. You don't have to pay anything. You can have this product. Go home with it now. Go home with a new couch. Go home with a new desk, and you can pay us later, but a lot more later. And it's the real problem. So you'll see them everywhere. But if you use it wisely, so Jess was sharing earlier too that she does use Afterpay, but always pays it off straight away, uses the cash flow tool. And if you are somebody who your personality doesn't get influenced, then use it. It's a tool, it's a facility by all means, but it's that self-awareness, right? So if you do, and it's often the people that don't know that they get themselves caught up, and then they start to begin to realize the need to unpack some of that. So yeah, being aware of it's really important. And the other one that always comes on the TV as well, and they look so, you know, all the colors, and they're funny, and I think they use animals and all sorts of things to try and sell. And this is the, you know, the wallet wizard. You know, anytime that you need cash fast, it's going to cost you a lot of money, and it will never go away. So what I would also suggest, you know, is that you're all studying, you know, incredible areas, you know, fields of study that you're working on, and incredible, you know, critical thinking skills, analytical skills, all of that. So please just use some of that in your financial life as well, and be critical and discerning about all of these different products and different things that they put out there. But also those, you know, creative thinking skills. If you do find yourself in a situation needing a certain amount of money, to think through what are your options, even for you to come up with ideas. You know, are there other things that you could do to earn money temporarily to increase your income, or things that you can do to reduce your expenses? Are there things that you could sell? So before you fall into the trap of this easy, click here, I'll give you $50 when you sign up, all of those kind of things, you've got to ask yourself, why are they making it so easy? Why are they paying me? Because they will make that money back tenfold. So that's the key. But it is hard to resist, and they prey on people often at times when, you know, they're vulnerable as well. And I'll get to that in a minute with the responsible lending. But we've got to try and be as strong as we can, as informed as we can, which is brilliant. You know, just coming along to these kind of sessions helps you to, you know, make sure that you're up to date with all the latest information. So I guess the takeaway is that it's a challenging landscape. It's filled with lots of different players. Millions of people will try to give you a credit card, buy now, pay later. They will, you know, interest-free loans if you buy their furniture. So it's really tough. But what we've got to remember also is the true cost of all of this. So this is just a really quick sort of snapshot example, but something that we think, you know, and this could be like that flight to Bali, $7.99 deal, whatever it is, and you put it on the credit card, but it ends up costing you twice as much. So it's really important that whenever you're using credit to know that the price at which you're paying, unless you pay it off straight away, like I think both of you have shared, that's exactly what you would do if you had credit, and Jess does with her Afterpay. But otherwise, the cost is not the cost that you pay for, and it is hard to work out exactly what it is. They make that information hidden. They make it difficult to understand, because so then you're not really making an informed decision. So you've got to make sure you inform yourself. So yes, there's the cost of the actual purchase, interest, late fees, annual fees, all of that, and it's difficult to analyze, but it's expensive. So remember, it's much more than that price tag. But what we often forget about too in the like financial wellbeing space, which is good now that we're you know, I think we're getting a better at making sure we're bringing in some of the psychological aspects of it too. So it's not just about the dollars and cents, but the stress and the psychological cost of having debt and multiple debts. I've had many clients with multiple credit cards, and really challenged by that. Really intelligent, you know, but being caught in the trap of, you know, keeping up with the Joneses, having a sort of a particular idea of, you know, what kind of lifestyle they should be living, and then stuck with that psychological stress of having so much debt and not knowing how to get out of it. So that's the true cost, not just that dollar tag you see in the shop. It's at least 2 times that, and then the stress on you, let alone on your relationships, and that feeling of being out of control, which is not nice. So now if we just have a quick, you know, I want to be sort of level-headed about this, in terms of credit cards too, and obviously, as I've said, if you use it and you're aware of your own personality, it can be a tool, absolutely. So I want to make sure that we cover off the advantages and disadvantages to a credit card. So it is convenient, useful for emergencies, but you know, if you used it and you were out and you had it as the way in which you were paying for the emergency, but only if you had already stacked up that emergency fund and you can just transfer and pay it off. That's all I would be looking at, because you don't want that emergency to be the thing that causes you to be bankrupt, you know, like you've got to, so it's not okay to use a credit card in an emergency. The best scenario is you've got the money saved up already. Often you can use it for holding reservations, yes, but we all know we can use our debit cards now, so you know, you both do that, you don't need it for that. That, you know, they often talk about protection against fraud, but again, debit cards also have that sophisticated technology. Often people think that you need to have it to establish a positive credit history. So when you're going to take out a loan, like Shopper would be aware of, it's not the only thing that's considered. So yes, it's part of a whole thing. Look at, you know, when they look at how much they can lend you, it's one of the factors. But if you've got, you know, evidence of saving history, your income, and you've saved up, you know, a good deposit for a house, you're not going to just have a credit card just to get a good credit history. So that was never a good idea to get one. This is talk about online shopping being safer. You know, we also know that, you know, using PayPal or some of those other online facilities are also good. So there are other options. And yes, there's a possibility of receiving bonuses, flight points, etc. But we've got to, you know, enter into that with our eyes wide open. And only if you're somebody who can pay off the debt straight away and never incur any additional fees are those bonuses truly bonuses. And we've got to know that we've got to be fighting against the culture to spend more and more when we've got that facility, because it's so easy to put something on that credit card. So the disadvantages, obviously we talked about those, the costs, how costly it can be, and the fees and penalty fees, that temptation to overspend. Identity theft can be an issue too. like any card, the responsibility around lost or stolen cards, other people can use them and just swipe them. But often, obviously, now we're talking about cards like the physical cards, but the technology movement is going to be towards, you see everyone using their phone now as well. So some of that's mitigated a bit. Applying for multiple cards in a short period of time could lower your credit score, a disadvantage, but also probably reasonable. Like, you don't want to be in that situation when that's happening. So yeah, I think we've kind of had a good look at credit cards and what the landscape looks like in Australia, and that it is a challenged one because we are just bombarded with lenders wanting to lend us money because it's the source of income for them. They make so much out of it, as we can see. But what we've got to note in Australia, we are one of the luckier nations that it is working hard at trying to ensure that those who are lending money are doing it responsibly. So we do have practices to try and make sure that we're protecting particularly people who are in vulnerable scenarios from financial hardship. And essentially what that responsible lending is meant to do is to ensure that they don't enter into a credit contract with somebody, with a customer, if they're an unsuitable customer. So they've got to make sure that they provide evidence that they've gone through the steps to ensure that, yes, this person, based on information provided, is going to be able to manage this facility. So this is a tricky area, and one that we could delve into and have a whole conversation around. But in terms of just making sure that you've got some information around to be an informed consumer, is to make sure that, so the obligation on the lender is that they need to make reasonable inquiries about a consumer's financial situation and their requirements and objectives, that they take reasonable steps to verify that consumer's financial situation. They need to make a preliminary assessment as to whether that consumer is suitable or not. And if the customer requests it, that they should be given written copies of this information and be really informed in how that decision's being made. So really important that you don't sort of step away from that process and not assume any role in it, because often what can happen is the consumer can just think, oh, I'm going to apply for a credit card and I want them to give me as much as possible, and they're going to want to try and give you as much as possible because that makes them more money. But what consumers often don't stop to think is, well, how much can I actually afford? And this is kind of probably stepping into mortgage land as well a little bit, because I guess my key message, and it will be backed up by the both of you, is to not have a credit card and to manage your money, with a debit card and a systematic approach like Jess has shared. That is where you want to be operating from. But if you do find yourself in credit card debt and the lender didn't go through the process of understanding your financial situation, and you've got yourself caught in a challenging situation that's putting you into financial hardship, then getting in contact with a financial counsellor, somebody who can help you to then work through. It's highly regulated, so there may be assistance that you might have access to if the lender didn't do the right thing. But really important to also think about our own role in that whole responsible lending. So make sure that you're assessing your own financial situation before you apply for any credit. So to define your comfort around how much you can afford to borrow and repay. And we will do a future webinar around, we can do one around mortgages. Actually, I don't think I've got one in the plan, but, working out, well, what would be a reasonable, how do I figure out, what is the value of a home that I could purchase? Given my current income, what would be the deposit? What is a reasonable amount? Because just a high level, we're talking about mortgages, we're kind of jumping off the credit cards, but because I know Jessie had mentioned, thinking about that for the future. They often say that you don't want your mortgage repayment to be more than 25% of your take-home pay, because once you go over that 25%, it starts to put downward pressure on you financially. Other things become challenging. So that's always a good thing to think about. So when you're borrowing money for a home, and Shopna, you might be able to check in with yours, but if you're able to keep topping up and paying yours off, it sounds like you're on a good path there. But it's just a good way to kind of check in to think, you know, okay, so what's my take-home pay? What's 25% of it? Okay, so that's the amount that I would, maximum amount that I would ever want to have as a repayment. You can kind of work backwards to what's the value of the house, or what's the deposit that I would need, and that can be really helpful. So coming back to credit cards then is, our role is to make sure that, we're aware of our own financial situation. We know what we can afford to borrow. But much better is to pay for things with the cash that we have, and make sure that your budget does have room for additional or emergencies, or to build up that emergency fund. So if there was something unexpected, you have access to it. And that's probably one of the key big takeaways, I hope, for everybody in this is, regardless of if you have a credit card or not, is the importance and value of that emergency fund for everyone, and the change that it makes to your relationship with money. So if you've got a credit card debt, it's going to get you out of that spiral, because if you go into if you've got an emergency, you've got access to something. It's not going to dig you deeper into debt, but then it's going to prevent you from getting into credit card debt if you're not in it already, and then you'll only build it up more. And it's certainly one of the foundational things to do if you're wanting to kind of increase your financial well-being. It's one of the good things to do, which you're both already doing, which is great. You might just want to do that check-in around, well, how much should it be? And for Jess, you might be able to think, okay, well, how much should that fund be? And given the savings you've already got, how much would I kind of allocate as an emergency fund, and how much would be a mortgage? So then how much would be a deposit. So then you kind of get an idea of how you're tracking towards that deposit amount as well. So that kind of brings us to the end of the session. If there's any questions either of you have, please feel free to ask them. I'm happy to hang around. And as I said, I think I was mentioning this to Jess at the beginning, and Shopna, you might know this because I think we've been in webinars before, that the SCPA have engaged me also for financial coaching. So they've got a number of free sessions available for which students can use. So if that's something that would be helpful, if you want to talk through anything or do a sort of a check-in, have a look at a budget, I'm happy to organise a consultation. So you can just email the helpline to book a session in. And then otherwise, just always a good check just to see if you're an SCPA member. It's free. That's the sign up kind of hyperlink. You may already both be, but it just gives you early notification to things and resources and workshops as well. So it's quite a good thing to be easy just to sign up, and there's no cost to it at all.